Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we will be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing on the key sectors and stocks that should be in focus for the day and the next few trading sessions. But first up, coming to the update in the global markets. For the fourth consecutive trading session, the tech-heavy Nasdaq and the S&P 500 index has marked a fresh all-time high on a closing basis, while the Dow ended on a relatively flat note. The S&P 500 is likely to continue its upward journey and test the levels of 5,520 followed by 5,600 levels in the short term. While on the downside, the support has shifted higher in the zone of 5,400 5,380 levels. Brent crude, if we see, has ended at 81.95 level on Thursday's trading session with a cut of 0.37%. Going ahead, the 20-day EMA will act as a crucial support for Brent oil, which is currently placed in the zone of 81.6 levels. Any sustainable move below the levels of 81 will lead to resume its downward journey up to the mark of $78 per barrel. If we look at the US dollar index, that is the DXY, it has ended above 105 level with a gain of 0.53% yesterday. Going ahead, 105.4, 105.5 will be the immediate hurdle for the index. Any sustainable move above 105.5 will lead to further upside towards 105.90, 106.4 levels. Now coming to the update regarding our markets. So in trade yesterday, for Nifty we had the weekly expiry. The benchmark index Nifty has traded in a narrow range of 127 points, which was the lowest daily range since May 24. Since the last 4 trading sessions, if we see, the index is trading in an extremely narrow range of 1% and forming small body candles. This clearly indicates indecisiveness at the current juncture. If we see, the Bollinger Band has narrowed down significantly on the lower time frame, that is on the 1 hour time frame. In technical parlance, it is known as Bollinger Band squeeze. It occurs when the volatility falls to low levels and the band narrows. A volatility contraction or narrowing of the bands can foreshadow a significant advance or decline. Hence, we may witness trending moves in the next couple of trading sessions. On the derivative front, if we see, the June futures has gained by 0.19% and the cumulative open interest of the current, next and far series has dipped by nearly 1%, which indicates overall minor short covering. Among the constituents of the Nifty index, if we see, 11 stocks have witnessed long built up. We have 22 stocks which have witnessed short covering rally, while 13 stocks have witnessed short built up and 4 stocks have witnessed long unwinding. If we see the put call ratio data, that is for the next week's expiry, it is currently at 1.07 and the PCR for the monthly series, that is the June series, is currently at 1.13. Looking at the option chain data, we see that 23,400 strike has significant call open interest followed by 23,500 strike, and on the put side we have 23,400 which has significant open interest followed by 23,300 strike. Going ahead for the day, the support has shifted higher in the zone of 23,320, 23,290 zone. Any sustainable move below the levels of 23,290 will lead to profit booking in the index up to the mark of 23,150 followed by 23,000 levels. On the upside, if we see, the resistance has also shifted higher in the zone of 23,440, 23,500 levels. Any sustainable move above the psychological level of 23,500 will lead to a sharp upside rally towards the mark of 23,750. Now coming to the update regarding Bank Nifty. So in trade yesterday, Bank Nifty has traded in a narrow range of 386 points, which was its lowest daily range since 18th of May 2024. Since the last 4 trading sessions, the index has been oscillating in a zone of 50,252 on the upside and 49,530 on the downside. Due to the consolidation, the Bollinger Band squeeze is formed in the hourly charts for Bank Nifty as well. Further, the daily RSI is oscillating in 57-55 zone since the last couple of trading sessions. This clearly indicates volatility has contracted significantly and we are likely to witness trading moves in the next couple of trading sessions. On the derivative front, if we see the June futures ended flat and the cumulative open interest of the current, next and far series has dipped by 0.89%, which indicates minor long unwinding. Now coming to the option chain for Bank Nifty, so if we see 50,000 strike has significant call open interest followed by 50,500 strike, and on the put side 49,700 has significant open interest followed by 49,500 strike. For the weekly expiry, the put call ratio is at 0.79, while for the June series expiry we have the put call ratio which is at 1.01. From an intraday basis, if we see the support 49,650, 49,600 will act as the immediate support for the index. Any sustainable move below the levels of 49,600 will lead to further profit booking in the index up to the mark of 49,200, 48,900 levels. On the upside, if we see 50,150, 50,200 will act as the crucial hurdle for the index. Any sustainable move above the levels of 50,200 will lead to resume its upside rally up to the psychological level of 50,600. Now coming to the key market indicators, so like we have been highlighting, the volatility index has witnessed a sharp cut in the last few trading sessions, and in trade yesterday as well we saw that the volatility index dipped by nearly 6% up to the levels of 14. Currently it is trading below its short term and long term moving averages, and going ahead it is likely to test the levels of 12.5 in the short term. Despite the consolidation in frontline indices in the past few sessions, if we see the advance decline ratio is tilted in favor of the advancing counters. This is mainly due to good participation from the broader market, that is in the mid cap and small cap counters. Now coming to the key sectors in focus. So in trade yesterday, stocks from defense and shipping space have witnessed strong bullish momentum. Along with the robust move, we also saw that there was good volume activity in these counters. We believe that these sectors are likely to continue to outperform the frontline indices in the short term. From the broader market, if we see the Nifty Mid Cap 100 and Nifty Small Cap 100 have marked fresh all-time high in trade yesterday. We believe that is likely to continue its northward journey. However, it is important to choose quality in these sectors. Now coming to the other sector, so we have Nifty Realty, which also marked a fresh all-time high in trade yesterday, and that particular sector also is showing extremely strong traction on the upside. So we believe that the positive momentum would continue and the index can move towards levels of 1160 levels in the short term. Now coming to the FII DI data, so both FIIs and DIs were net sellers to the tune of 3033 crores and 553 crores respectively. If we see the FII long short ratio for index futures is at 46.34 on a net basis, this as they purchased about 45,194 index futures. On the stock futures front, if we see the FIIs have sold to the tune of 8,095 contracts, while on the options front FIIs bought 28,166 call contracts and simultaneously purchased 2,372 put option contracts. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.